Hi, folks. Dan Bird here with the Daily Scan for Monday, April 28th. I am still traveling, 2 more weeks to go, but I have some time to do a recording tonight. So let's take a look at the market. Right now, it just seems to be treading water, not doing much of anything. As always, I am not a financial advisor, so everything I do here is for educational purposes only. And any suggestions to buy or sell any particular stock or equity is strictly up to you. I am not making any recommendations. You need to take responsibility for your own trades. So let's take a look at the market. Didn't do too much today, but there is some interesting things to look at. So if we go to the home page right over here, you can see that the market bias chart went up some more today. I said yesterday it probably would. We had a big, huge run with a lot of signals, a lot of bullish signals on the short-term trend Friday. And today we've got a few more of those happening. You can see here that the market trend right now, it has two bull signals, so it's green. Only the long term still left really to turn bullish. So the overall trend is definitely up. We will take a look at the individual indexes in a minute. If we look at the market bias chart, you can see some more green boxes here. In the short-term area, we've got another long-term red one, which typically happens because these are delayed. But we've got quite a few greens, only one other red one down here, which was actually on the TNX, I believe, the 10-year yield. 10-year yield continues to go down. Yeah, it gave a short-term down signal as well. So it's continuing to fall, as is the US dollar for that matter. It's right here. US dollar falling, started to go back up, but falling again today, going lower. That actually is a good thing. US dollar falling means that there's more liquidity in the world or it will create more liquidity in the world. It also means that large global companies in the US will be able to sell their products more cheaply overseas, so they should do better with a lower dollar. So that's actually a good thing for now, as long as it doesn't get too low. Again, you can see over here the short term, the orange is clearly heading higher. Medium term is too, and the long term seems to be sort of flattening out. So that's where we are right now. Got lots of greens up here, which is nice. So the market in general looks pretty solid. I talked about liquidity. If I go to the charts page, for those that are subscribers, on the charts page in the middle column at the bottom, I put an international section down here. And I also put a liquidity section right here to show the dollar. If we look at liquidity, you can see the dollar is coming down right here. So whenever liquidity gets started, usually it takes about 10 to 12 weeks for the market to start picking up as a result of more liquidity in the system. And you can see what happened back here in 22. Liquidity started coming in and the market began to pick up back then. And right now we are right at that 10 to 12 week point right now. And we are clearly getting an uptrend. Will that uptrend last? That's the big question. I put a question mark down here. If it gets above the 50-day moving average, then it probably is in a sustained uptrend, but we shall see. Manufacturing is not moving up yet. Commodities are going sideways, but oil is heading down and the 10-year is heading down slightly as well. So these are the three key ones for liquidity, global liquidity. If you think of the US dollar, most countries denominate in the US dollar because it's the reserve currency. And if they have to refinance their debt, they would rather do it with cheaper dollars because it allows them to refinance their debt at lower rates with cheaper dollars. And that is what puts liquidity into the global market. Should also help Bitcoin, by the way. So let's go back over here and take a look at, I'm going to go to the homepage and we'll look at each of the indexes. So the S&P, this is something that I did not do Friday. I meant to do it, but I didn't. And I wanted to show everyone that we are now above the downtrend line. So as of Friday, it closed above the downtrend. Today is a spinning top indecision, just basically not doing much of anything. It could also be a continuation pattern. So it does not mean that it's a reversal pattern until we see what the next candle does. So let's see what happens tomorrow. Continuing up still needs to get through the 50-day and the 200-day. So there's still a lot of work to do. But everything else is implying that the uptrend may continue. If we look at the NASDAQ 100, similar look, got a spinning top. It actually broke through the downtrend line on Thursday and continued on Friday. So it is solidly above its downtrend. It has already put in a higher low. It is technically putting in a higher high right now. If you count this higher high, this high over here, it's a higher high right now. So it could certainly pull back or move sideways. Moving sideways would actually be healthy, especially as it approaches that 50-day moving average. It needs to build up some energy to get through it. So we'll see if that can happen. Let's look at the Russell 2000, see what it's looking like right now. It also today broke through its downtrend line. Also has kind of a spinning top, so indecision. We need to see what happens tomorrow. But it looks similar to the other ones. It looks like it's starting a new uptrend. So that could continue. Now, what about Bitcoin? Bitcoin today moving sideways. So we've got a real consolidation pattern going on right here with Bitcoin. And this is what creates the squeeze from John Carter. When stocks or indexes move sideways like this, they begin to get squeezed like a spring getting ready to explode one way or the other. Does not tell you which way it's going to explode, however. Looks like the volume is starting to pick up a little bit, but didn't really do much today. Still kind of moving sideways. So keep an eye on Bitcoin, see what it does, see if we can get back up here to the 100K area, which would be the target for this inverted head and shoulders that I showed you last week. So there's the left shoulder, there's the head, there's the right shoulder. The target for that would be 100,000 right up here. So it could be building up the energy right now to finally break out and head higher. That would not surprise me at all for that to happen. All right. A couple of other things I want to show. First of all, where am I on my trip? So here we go. There's the trip. Right now, yesterday, over the weekend, when I did the video yesterday, I was up here in Twinsburg, Ohio, right near Cleveland. And these are all the stops I made on the way. Valdosta, Georgia. This is Lake Lanier in Georgia. And then we went to Hamilton, right outside of Cincinnati. And then Twinsburg, right near Cleveland. And today I am on another lake. I'll show you a picture of that in a minute. Lake Linganore, which is actually where I used to live. I used to live on this lake before moving down here to Naples. So we'll take a look at what that looks like in a second. But there's yesterday's traveling. Now we're going to stay put here for 3 days until Wednesday. So may not show this on future videos, but Wednesday we'll start to head south again. So that's where the trip is at. There's where we are now. This is the lake I used to live on. This is a friend of mine's house right down the street from where I used to live. Beautiful lake with boats and very similar to what my view looked like as well. So really, really nice place. We're going to relax here for a few days and then continue with the trip. All right, let's take a look next at something that I promised a subscriber I would show. Oh, no, I need to do this first. I forgot to mention this too on Sunday. This is Buc-ee's. Anyone that knows Buc-ee's, if I go back here to the trip, we hit Buc-ee's here in Kentucky. I think it was right around, or actually Tennessee, right around Knoxville, Tennessee. But there are lots of Buc-ee's in the South, and you'll see the signs from miles and miles away. Be sure to stop at Buc-ee's. So this was our our first and only time to stop at Buc-ee's. It is a huge place with just about anything you could possibly think of. So if you ever see a Buc-ee's, you definitely should stop in. We probably will never stop there again, but it certainly is an experience to give it a try. So that's Buc-ee's. I wanted to make sure to let everybody know that I have now visited a Buc-ee's. Those in the South know what I'm talking about. Okay, so here is the comparison with 22. So 2025, we're coming down. We kind of went sideways a little bit today, right here. This is the 12% target point right up here. That's what the 2022 rally went to, about 12%, before heading down again. So we want to continue to watch this and see what happens when we get close to here. Right now, we're about 9% from the low right here. So this rally represents about a 9% gain from the low. And we don't know yet. Sorry, we don't know yet whether it's going to follow 22 or not. Now, one subscriber made a very interesting observation, and that is we are in a trade war right now, which is similar to the 2018 trade war. So maybe it's going to look more like 2018 instead of 2022. That could be true. So I decided to make a comparison between 2018, the previous trade war, and this time, the current trade war. There's a few differences between the two. The most notable difference, I think, is that we potentially could go into a recession. I think the jobs number is going to be pretty good, or at least adequate, this coming Friday. I talked about that yesterday. I think the CPI number in May is going to be dropping off a cliff. Inflation is going to be dropping significantly. Regardless of what everyone and the media keeps telling you about tariffs being inflationary, they are not. And that's probably going to prove it in May when CPI comes down quite a bit. We'll talk about it when we get closer to it. But let's take a look at 2018 next to 2022 and see how similar they might look. Here's what they look like. So here's the 2018 trade war. Here is the whole downtrend right there, which went down about, I know it's kind of hard to see this, but that's about 19%, 19.5% back in 2018. Right now, we are right at about, actually the low that we hit was right around 20%, the low for this whole period here. In 2018, this took 3 months before the rally began. And you can see I drew this box right here, right where the rally in 2018, after hitting the low, came up, reversed, went down, and then took off again. That's what happened over here. We came down to the low, we went up, went down, and then took off again. Now, will we do the same thing? So where we are right now is right about here. This is as of today, and this is probably more like right about here. Now, in 2018, unlike 22, 2018 just continued going higher until we ended up making new highs again in 2019. If we mirror 2018, then we are pretty much right here at this point. That would be this point right here. And that means that we should know here soon, maybe within the next week. It could be the jobs number on Friday, could be that CPI number, it could be the Fed meeting on May 7th, could be anything that creates a catalyst, could be some negotiations on trade, could be lots of things that cause us to continue to go higher. But if we make this comparison, you can see it took 3 months over here to get to the low and then to start climbing back up. And right now we're at about 2 months. So we're doing it more quickly than we did the last time. So this is kind of a more positive take on it. And this might be more similar because 2022, the Fed was raising rates aggressively. By the way, I'll show you. I'll actually show it to you. So let me jump back to the charts page over here, and we'll look at Fed rate hikes and recessions. So you can see right here, the Fed was that's 22 right here. Fed was raising rates more aggressively than they have ever done in history. That was the biggest reason for the big sell-off in 22. You can see it right here. However, notice also that when we hit the bottom in 22, the Fed was only halfway done with their rate hikes. In fact, they did even higher hikes after we hit the bottom. They did 75-point hikes like twice in a row. More rate hikes, higher rate hikes, even after we hit the bottom. So the market will not wait until something like this is over. It started going down when the rate hikes began, but it did not stop just because, the rate hikes continued even though the market stopped going down. So 2018 now is right here. Here's the 2018. And you can see where we are over here, all the way on the far right. So here's 2018, big drop, and then a recovery, big V recovery right there. And at that time, the Fed had been raising rates as well, but it started to taper off and started to go sideways right at the point when we got the rally. Now the Fed has already been doing that. So the next thing we're looking for is for the Fed to start cutting rates. I don't think they're going to do that in May, but I think rate cuts are coming, and the market typically anticipates that ahead of time. So we could get a similar pattern as we did back here. Now, hopefully we won't get another pandemic, another COVID, but the 2018 pattern right here, and we're going to know, I think, pretty soon, the next week or two, which of these patterns we're going to follow, whether it's 22 or whether it's 2018, one of those two. So keep that in mind. Keep an eye out for those. So if we look at the dashboard over here, here's equities. The Dow had a little bit up today. NASDAQ was a little bit down today, but pretty much flat. So it went down, and everything went down in the beginning of the day and came all the way back up again, which is a nice move. Actually, if you look at the S&P over here, again, I said that was a spinning top, but it's near the top of its range for the day. So that was pretty good. The VIX came down, but it's still above 20. So it went up in the beginning as the market went down, and then it pulled all the way back as the market started going up. Right at the end of the day, it spiked a little bit. So I'm not sure what happened at the end of the day today, and we'll see if that carries over into tomorrow as well. Bonds, the 10-year, continue to go down. Again, bonds going down and the dollar going down. Here's the dollar. Dollar went down again as well. Helps liquidity, worldwide liquidity. Commodities, gold, which had been pulling back, had a little bit of a rally today. So that's good for gold. Oil, pull back again as well. Oil is another one, the third piece of the global liquidity component. And it continues to trade lower as well. And then crypto, finally, Bitcoin right here. Bitcoin was up, was down, was up, and came down, back down again. So just kind of moving sideways for the last couple of days, but that actually could be a good thing. That means it's building up energy, getting ready to explode one way or the other. It looks like it wants to go to 100,000. So that's the direction I think it might be headed in. All right, let's look at the sectors down here. So energy was the number one sector for the day today, but we had real estate, utilities near the top. Those are defensive sectors. And we had technology and discretionary near the bottom. Those are aggressive sectors. But we also had staples at the bottom, which is also a defensive sector. So these are all, it's really a mixture right here. It's not really telling us much. The advancers versus decliners are pretty neutral as well. They're not really giving us any indications. Financials and energy, you can see right there were the two biggest ones, and utilities and real estate are defensive sectors. So the fact that they have more advancers is not necessarily a good thing right now. And then we could go down here and see the earnings calendars. These are the ones for the last 2 days on the S&P 500. The one that I want to look at is NXP. Let's see what that was on the 28th. So that was today. They reported today. Don't know what happened, but they had been going up. So semiconductors really needs to lead the technology sector higher. So we'll see if that will happen. I'll show you something in a minute on that. Then the industry groups, the only one that was of interest to me anyway was biotech down here. It was in the top 10. And if we go back to the charts page and look at biotech right here, and we can look at the stocks in biotech and see what was there today, just for today. And you can see PRTG was up 27%. This one is up 26%. A lot of these made. Curus, I think, is a marijuana stock, up 14%. ADMA, which is one that had been at the top of our top 10 list for quite a while last year. Looks like it's beginning to make a move again. I'll show you that in a minute too. So that's for the day. And if we look at this for 1 week, you see right here, Jaguar Health up 89%, almost 90% for the week. There's Curus again, up 43% for the week. So it looks like marijuana stocks are making a move. All right, so if we go back here to the dashboard for a second and look at my top 10 stocks, you see the one that's at the top. These are all stocks. There's 32 pages with 10 on each page, so about 320 roughly stocks. These have all been in the top 10 list and may have dropped out at some point. My top 10 list gets updated every weekend, and I did get a chance to do this weekend. You can see Palantir, if it's green, it's in all 3 lists. So this is relative outperformers. They have to outperform the S&P by 7%, and they have to outperform their own peer group by 10% or more. These are the ones that have beat earnings and revenues. And this is the IBD top 50, the top 10 of the top 50 over there. So anything that's in all 3 lists gets green. So Root has a green, WGS, which you can see just reappeared in all 3 of these lists. I'll show you what the chart looks like on that in a second. And then Palantir was already on this list, but it's brand new to this one over here and brand new to this one. So Palantir has been looking really good. So if we look at WGS, you can see what the chart looks like on this right there. So there, continually it goes up, pulls back, goes up, pulls back. That's what you want, something that continues to go higher, but has pullbacks where you can get in. So right now it has a spinning top, so that might be ready to start to pull back again. And then, so an ADMA was the other one that I mentioned. If I look at ADMA here, ADMA had a nice move today, was not related to earnings. So sitting right up here, that is a breakout, definitely a breakout above resistance. Pull back though at the end of the day. So we'll have to see if it likely is going to pull back some more, a little bit at least, before perhaps taking off and going higher. So we'll see what happens there. And then the other one over here was Palantir, of course. Palantir chart looks like this, and this one has a hammer at the top, so this one looks like it's poised to actually even go higher, and its breakout is up here at about 125, so it looks like it's heading that way. It most likely, when it gets close to 125, it's at about 115 right now. It will probably pause and pull back a little bit, and it might make a handle to a cup, so that is potentially a cup. Goes up here and makes a little handle. This is an IBD pattern, and then breaks out of this resistance. It will head much higher. In fact, the target for this would be from 75 to 125. So that's 50 points. So the target is 175 if it does make a cup and handle and if it does break out. So we'll see. All right. Something else I want to show you on the main homepage over here, the new Dow Theory. I haven't showed this in a while. This explains the Dow Theory. It basically looks at the Dow Industrials and the Dow Transportations, and it assumes that they should move together. And back here in February, when they hit a they made a double top, basically hit the same level, the transportation area was going down. So that is Dow Theory saying that the market is likely going to go down, and that's what the market did. So if we look at it right now, it's sitting right at the 21-day for the Dow, but the transportation has not yet made it back to the 21. So the transportation sector is still weaker. So it might be implying that we may have more weakness ahead. Now there's a new Dow Theory that I put together, which has 3 other comparisons. One is equal weight NASDAQ 100 to the S&P. One is equal weight communications, cap-weighted communication services versus the internet group. And the one that I'll show you is NASDAQ 100 versus semiconductors. And semiconductors should lead the NASDAQ higher. Right now, they look almost identical. So in both cases, they're above the 21-day. The NASDAQ actually went above it over here and pulled back right to it. But they both now have spinning top hammers, a little bit of a hammer at the top. So that probably means consolidation. Might consolidate a little bit. It's right at the upper range right now, but keep an eye on semiconductors in particular, because those are the ones that really have to lead things higher. Now, speaking of semiconductors, another subscriber asked me about SOXL, SOXL, and would that be a good thing to play? This is a 3x leveraged semi stock. So it will move 3 times whatever the semiconductors move. So you see up here, it's 3x. Make this a little bigger. And right now, sitting right on the 21-day, I would call that not quite breaking out yet. And the momentum is well below zero, so still confirmed downtrend for the semiconductors and for this one, the leveraged semiconductor stock. So it certainly could be a time to get in right here when it breaks out of the 21-day, which is the question that was asked. Yes, if it does break out above the 21-day, especially with higher volume, today was lower volume, that might be a good time to get in. That might imply that semiconductors are beginning to take off, but it's still got a lot of resistance to get through. So you need to watch it and set your stops accordingly. The nice thing about looking for a breakout right about here is that you can set a stop right at the low of this candle right here, right in between this black candle and this white one, somewhere right around there, say $11. So it's very low risk to do it that way. And if it does take off, then you can just ride up with it. You can do a half a position instead of a full position. There's a number of ways to lower your risk, which I covered in a Technical Tuesday previously as well. So I think that's everything that I had to cover for today. Hope everyone is being safe out there. I will, if I can, I think I can probably do one tomorrow because we're staying put for the next couple of days and see what the market does tomorrow. It'll be important to see what that follow through day is with the rest of these candles for tomorrow's market. But let me know if you have any questions. Please like and subscribe. And also let me know if you're in any of the areas that I showed you that we're traveling to. A couple of people did say, they were down near Valdosta. One person said they actually are on Lake Lanier. We're going back to Lake Lanier, by the way, next Saturday. So maybe we can get together and have a direct meetup for a YouTube video subscriber. I don't know. We'll see. So I'll show you where we're headed tomorrow night, where the next stop will be starting on Wednesday. We'll continue our trek back south. All right. Thanks for watching. Let me know if you have any questions or anything you'd like me to check out, and I will talk to you later. Take care.